Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for December 10th, 2007. Well, today, this is it, folks. Today was the last day before the Fed tomorrow, and the Fed announces their rate decision at about 2:15 p.m. tomorrow Eastern Time. And today was exactly what we basically expected. And those of you that have been following the videos know we've been expecting this little move up here into the Fed decision, and then we're going to have to see where we go from there. Those also you that have been following the videos know I did not put out a video on Friday, was going to do it on Sunday, and then lo and behold, I kind of thought about it and I said, you know what, Monday's going to be non-existent. Nothing's changed from Friday to Monday. Still the expectation is the same for the Fed, and we'll go over all this stuff. But what I just want to focus everyone in on is exactly what's going on today. So now looking here at the market, we can see that the ES futures are just closing, and again, the ES futures close at 4:15, so they have 2 minutes left as it is 4:13 p.m. here. And it's important to kind of just look at the futures here, and the volume, which is I'm looking at right here, is just over 1 million contracts, and the volume today is extremely light. So it's important to realize that, folks. It's important to realize that this is the expectation. This is what happens prior to the Fed. Whenever you have a Fed, especially it's such a big rate decision coming out tomorrow, like the last couple months have been when the Fed has met and given the rate cuts that we've gotten, the market gets very, very quiet prior to the Fed because everyone's anticipating. Everyone's kind of positioning themselves. No one wants to take a large position going into the Fed either way, short or long, and therefore the market kind of just does its thing, light volume, and that's what we're seeing the market do right now. Now here's the intraday chart, and you can see the market was just kind of, we did get a move up here, but then ever since then it kind of just went sideways, and I just want to keep in mind and make sure everyone fully understands that. And I'm just going to get out my trend tool here so we can fully look at this and see where the market is going to go. Alright folks, so again you can see that we had the move up here right at the open from 9:30, and then ever since then I'm just going to draw a straight line across and you're going to see what I'm talking about. Alright, there's a straight line across, and you can almost draw a little zigzag pattern. It just goes up and down, and if you took the averages, it's almost basically right there. So very, very interesting market. You can see we got small spikes to a possible double top right here intraday, and then you can even see a possible little W formation right here, and then a little V formation and a move up. Okay, so there are definitely little patterns showing up here in the market. You can see how the market basically, ever since this initial spike up, you basically hugged the 20 moving average all the way around, coming back, touching it, selling off again, coming back, closing above, hitting it as support now, and then moving back up. So my point being here is that, folks, even though volume was extremely light, we still saw definitely some different trading stuff going on in the markets, and there were still patterns formed. And that's important to realize, is that it doesn't matter if there's light volume or not. Maybe light volume is tougher to trade because the swings can be a little wilder or there's no real direction, but you're still going to have pattern formations, and that's why it's so key to analyze and learn chart patterns and candlestick patterns and candlestick, buy signals and sell signals, moving averages, stochastics, and the basics that we follow and we've combined to make our kind of overall view and how that serves us best. Okay. Now again, we will look here on the daily, and you can kind of see the daily. We had that big sell-off here, selling all the way off here, and then since then we've bounced up. We retraced, and you always look for that 1-2 retrace, alright? Alright? What I like to do, what we like to call it is you have that thrust up, and then the small pullback, and I love when the pullback always comes down to this 20 moving average. And those of you that were watching the videos, and I kept on saying when we sold off here, and everyone was saying should we short it here, I kept on saying, well, give it a little time. I still think we have one more move up. Sure enough, we had that move up. And as long as you know your patterns, you can understand that. The fact that we were able to close above the 20 moving average here, then you got the 1-2 pullback here, that's when you know you're generally, the odds favor another push up. Now, everyone always is asking us now, well, where do we go from here? Are we going to spike up more on the Fed? And the honest opinion, there are slight odds favoring one way or the other, but there are different ways to look at it. And let's now get into what the Fed could possibly do. Now, the expectation in this market, the bond market's pricing in a quarter rate point cut. All right? That's what the bond market's pricing in. Alright, now whether or not the bond market is correct or not, who knows? We'll find out tomorrow. Now the overall stock market and people and the media are calling for a 50 basis point cut. Now the question is, it's all about expectations being met or exceeded if this market is going to continue to rally. And that's important to understand. Many people out there say, well, if they cut 25 basis points or if they cut 50 basis points, the market's going to rally because that's what the market expects and that's what's going to happen. Well, it's not that simple, because this is why. The market has expectations, yes, but there are multiple possibilities of how the Fed does it. It's not just the rate cut, because the rate cut affects what the rates are today or tomorrow. At 2:15, the rate cut will be announced, and that's what it's going to be. A lot of it has to do with their statement in regards to future and the economy. Are they going to say inflation's good? Are they going to say it's getting worse? Are they going to say it's getting better? Or is it not a concern? Are they going to say that we're looking towards to possible recession? Are they say that we will not go to recession? Are they going to comment on the housing market? So my point being here is that a rate cut announcement of 25 basis point cut or 50 basis point cut is not really is not going to tell us where this market will spike. Now, I think whatever the initial cut is, you're going to have a reaction in this market. There's always an initial reaction. Many times it's the wrong way because people take that initial cut, which should be a cut tomorrow. I'd be a little shocked if there wasn't a cut at all. And then they run with it, and they forget to read the statement. And then afterwards, the statement's read, oh, wait, they're saying this. Then you see a big reversal in the market or a big bounce if we sell off hard and so forth. So, again, personally, and I speak from my opinion always, and just about what I'm going to do, I'm going to be mostly in cash tomorrow going in the Fed. There's no reason, if I really wanted to gamble that much, I'd go to Vegas or something and throw some money down on the table if I really want to play odds in that way. Because really, the reaction of the market, I'm not even sure of. I can tell you after the reaction, based on chart pattern formations, the likelihood of a move up or down, and we'll cover that tomorrow. But again, that's going to be tomorrow, and we'll have to figure that out when it comes. Now, also what I want to point out here in regards to the Fed, and I'm going to put up the Nasdaq chart just while I'm talking about the Fed a little more. And you can see the intraday Nasdaq chart. Very, very interesting Nasdaq chart, actually. And almost like a little M formation here that I'm actually just looking at, which is kind of interesting. And it's actually a pretty wide M pattern, MA pattern, actually. We did not fall. Usually you break the low here on an MA pattern, but I guess the light volume had too much to do with that, and we just got too little time. But what usually in this situation, you have the M pattern and the A pattern, and when the A tops out here, which it did right here at the 20, and this is a beautiful chart to do analysis on because it's so nice. You have the 20 moving average right there. We hit the 20, we sell off to the A formation of the A, but in a normal market, you usually see an A pattern break lower, and you usually see a market here. We did not do that in this situation. In fact, we just kind of hugged sideways and made a little flag pattern to the side. So that's what we did. Anyways, going back to the Fed here, folks, while you look at this chart and kind of can analyze it for yourself, and you should always be doing that with charts I have up. Yes, I'll talk about them. I'll do my analysis. But even before I say it, kind of look at things. Say, what is he going to talk about? What is he looking at? That'll increase your knowledge. Trust me. It's like testing yourself prior to the fact. But anyways, going back to the Fed, and I keep on saying going back, but understand that not only is it the statement, but also there's a discount rate factor here. And we all know that the discount rate could be cut as well. So maybe the Fed, maybe the overall market is hoping for a 50 basis point cut. Maybe the Fed only gives us 25 basis point cut, but maybe they cut the discount rate by 25 basis points as well, or 50 basis points, and that could cause a rally if that's a big enough cut. And I do happen to believe that that the government or the Fed, and again, the Fed and the government are not related. Understand that, folks. The Fed is a private bank, but I believe that they've talked about it, and they're hoping that by cutting the discount rate enough, they're going to increase liquidity in the market again, letting these banks borrow at a very cheap rate. So I could see that happening. I would not be shocked to see a discount rate cut tomorrow. Okay? So anyways, long story short, that's what the Nasdaq is. Tomorrow, 2:15 p.m., the Fed is coming out, and it's what it's all about at this point, folks. We're waiting on the Fed. Tomorrow, light volume is anticipated. I do anticipate light volume. You'll have initial move right at the open, just like always, but by 10:15, 10:30, the market's going to probably just, trend out, and whichever way it's kind of going, it's going to drift that way, sideways, maybe up a little bit, if expectations still are for this nice cut in the market and maybe a positive statement. We have seen oil continue to pull back in the market, and let's look at the USO chart here, and that's the intraday, but here's the daily, and I just want to point out again the M pattern formation. These M pattern formations are great pattern formations to watch. Now you're getting a consolidation area here, and the question is, do we break down here, or do we break up, back up? Now if you break back up, you're looking at a resistance point here at the 20 moving average. All right, so you don't have a lot of upside potential here until we clear that 20 moving average again. This chart for me personally, because we're in a downtrend now, or topping out in this trend with the double top right here, you got to favor the downside once we bounce back to this 20. So in my opinion, if you're asking me what is there a play or not, or if I'm looking at it for myself, unless this moved back to the 20 moving average, I would not play this. If it did, maybe I'd give it a small short position, test the waters out, see if I'm right that you get a move down. Okay. Looking at the GLD was up nicely today, $1.40. The gold was up very strong today, so take that into account as well. Overall, all eyes on the Fed, and I keep saying that, folks, and that's the way it is. There's not much else to say, and that's why I didn't do a video Sunday night like I talked about originally, because there just isn't a lot to say between Friday and today. All right? Tomorrow we'll have plenty to talk about, trust me, and I look forward to it with everyone. I hope everyone comes and joins the videos. Come visit our website and check out the Intraday Stock Chat, the swing trade alerts. Private consulting is wonderful for learning, and the options alerts. In addition, check out the you can always check out everything on the website, email us with questions and so forth. We do our best to get back to everyone. Have a wonderful day. Take care.